So crude oil prices rise. So oil prices posted a loss last week after OPEC agreed to increase production from October through September 2025. Ryan McKay, senior commodity strategist at TD Securities, said the energy complex continues to recover from the OPEC announcement. The agreement loosened the fundamentals, but prices should find some level of support given OPEC is likely to avoid causing any major oversupply. Goldman sees a $75 floor and a $90 ceiling due to higher than expected global inventories. Let's see. John, I think you were the one that kind of threw this
I
in
like
here.
this. Well, I'm going to give you this little tidbit on oil. And I find this kind of interesting about inequity of our markets, right?
Mm-hmm.
When we hear everybody talking on the news that everything's fine, our GDP is fine, our unemployment rate's great, and so on. But I think that you have to look beneath the numbers to get a better understanding. And where I think the middle class and under is being affected far more negatively in this market today than the middle class, upper middle class, and higher. And I think we look at the overall numbers and everything looks fine. But let me just give you an idea of energy prices year to date. Energy prices are up 35.6%. Now, who does that affect the most? It affects the middle class and under. And I look at the energy prices of, I look at this OPEC data here, and it says we're going to come back down. I filled up my car yesterday, $80 to fill up my car. It's the most I've had to pay. I mean, I can't remember. I know I've paid that much years ago, but this is affecting the spending and the overall habits of our middle class and under. And it is starting to cause a problem. We don't think about it that big of a deal. And OPEC comes out, says that, these nice things are going to keep it between 75 and 90. But when you go and you fill up your tank and it's $80 to fill up your gas tank, when it was $50 several years ago, when it was actually, I remember $42. I remember that because it was 2019 or I forget what day, but it's before COVID. But I remember being like, oh my gosh, this is fantastic.
What's
We're
the
under
cheapest
$2.
gas you remember?
Growing up, I remember under $1.
Oh yeah, I
Like 80 cents a
yeah, I was
gallon,
gonna say
maybe?
70. I remember 75 cents a gallon.
I saw it.
Yeah.
And I'm like way younger than you
Yeah,
guys.
thanks.
I always like to remind you, but I saw it for 98 cents in Georgia on a family trip one time.
Yeah.
Wow.
I was really young, but that like always stuck with me. I think that's the only time I saw it for under $1.
Yeah.
back in we were in Nashville. I don't even know what years those were. Early 2000s. We had a Suburban, and that's when they started limiting, the pumps to $100 or $125. You'd have to fill it, max it out, shut it off, put your card in again, and fill it up again. I would say probably 2 years ago was the most I've paid, in my lifetime.
Yeah.
They've come back. Gas, price of oil, gas it's a regressive tax. It hits the people in the lower income brackets the hardest because it takes up a much bigger percentage of their income.
I'm going to hammer one last thing on. I know I kind of brought up the oil thing, but I want you guys to think about this as well. Unemployment remains at 4%. And so the same as like the gas prices and so on, we hear that and we're thinking, oh, things are great, right? 16 to 17-year-olds have soared to 13.6 unemployment from 9.7. Unemployment among 20 to 24-year-olds is 7.9% versus 6.3% a year ago. Again, I'm looking at these things, and I look at the high prices for energy, and I look at unemployment for our younger age people, and I worry about that part of our economy being a pretty big problem. And I also think that leans over eventually towards the overall economy when money starts going out. We're not spending as much, and I kind of think those are kind of worrisome signs. I do think the OPEC information here is not alarming in the degree that we're going to $120 a barrel and it's going to be,
Right.
astronomically higher. Yeah. I just brought that up because I'm looking at we kind of tend to forget about it, and then we're 35% up on gas.
I think around here most unleaded is, I don't know, 285 to 290. I think you'll see. You'll see over 3 here pretty soon.
I think if you go, I filled up yesterday. I'm telling you, and I filled up 3 days before that. This is the highest I've paid.
You filled up twice in 3 days?
Well,
how much driving?
I only have 4 gallons in my.
I've
do a lot
seen
of
over
driving.
3. I forget where we're at. Oh, out towards the lake.
Yeah.
It was like 302. But yeah, here in town it's like 280.
It's creeping back up. Summer driving season, they'll do that, and it's just expensive.
Yeah.
Oil prices aren't immune from overall inflation.
Right.
But I don't think we'll see 75 cents a gallon
No.
anytime soon.
Did you see California? They're talking about like taxing per mile or charging you per mile because of all the EVs, and they're losing out on the gas revenue or gas tax.
Okay, completely unrelated, but you're talking about these charges. Surge pricing. Have you heard about this? And it's in New York.
Yeah.
Congestion pricing. A law was supposed to go into effect, I think, July 1st. New York City was implementing congestion pricing for cars coming into the city from 60th Avenue and south. So basically Midtown to the financial district. They were going to charge a fee per car coming into the city. And last week the governor said not going to do it because she's worried that it'll hurt. Because, if you're Wall Street, you don't care, you'll pay it. But what they're worried it's going to do is it's going to hurt tourists coming in. So they've done away with the congestion pricing because when it was implemented, it was seen as this new way to kind of restrict cars, encourage people to do mass transit coming into the city. But now the governor is taking it off the agenda.
These are two states with like the highest state income tax.
Yeah.
And you're like, just
I don't know how anybody lives there. I don't know how anybody lives in New York, how anybody lives in California for lots of reasons.
Well, when we were in California, we filled up, it was $5.50, $6 a gallon. And, the clients that we have out there, that's a reason why you see so many Teslas.
Right.
Is because,
they're about to start paying 30 cents a mile or something.
Golly,
but you're also not allowed to, use gas lawnmowers too. So
I know. Yeah.
Anyways, okay. So the crash of a lifetime. Economist Harry Dent, who many of you probably heard of, but has been outspoken about his opinion that we are about to witness the crash of a lifetime in 1925 to 1929. It was a natural bubble. There's no stimulus behind that, artificial stimulus per se. So this is a new spot. This has never happened. Dent said on Tuesday. What do you do if you want to cure a hangover? You drink more, and that's what we've been doing. Flooding the economy with extra money forever might actually enhance the overall economy in the long term, but we'll only see when we see the bubble burst. So he's basically predicting an 86% crash in the S&P 500 and a 92% crash in the NASDAQ by sometime mid-2025. He thinks NVIDIA could go down by as much as 98%. So